Today we are analyzing gold chart. Some interesting observations on the chart for gold. So we'll look at the gold ETF GLD, which tracks gold, SPDR Gold Trust. GLD is a ETF, and we'll also look at the futures for gold futures contract to understand what's the live price like for the gold. So first, let's look at the gold ETF. Some interesting price action coming around for last happening around for last 2 days. As you see on 22nd April on the chart here, we see a bearish engulfing on this chart for GLD, and this is not good. And it has also happened on the high volume, as you can see on this bar here. It traded more than 35 million shares or ETF units on this day. So this tells that there is a lot of institutional selling or big funds or big guys are moving out of gold, and rightfully so because it has been on a tear for last few months. So watch out, guys. Gold is not looking so great on a couple of days or this week at least. So heading into next week and in future months, it may not be so attractive. That's my understanding as I look at the chart right now. But let's look a little bit more deeper, try to understand more longer term nature of this overall move. So for that, let's look at the 1 year chart and see the whole move that has happened on this chart for 1 year. So we have moved up from like 212 to all the way to 320. So it's roughly around 50% move in a year. So that's a big move for gold. And let's look at the weekly chart for the gold ETF and let's put some Fibonacci extensions on this. So as you can see on the weekly chart here, the previous peak was roughly around 181, 180 range. That was in September 2011. And since that time, it did nothing for almost 4 to 5 years. So it came down from 180-ish to $100 a unit. So as you can see, roughly around 45% of correction over 4 to 5 years. So this happened because we moved from during the recession time of 2007, we moved from $68 all the way up to $190. So if you understand the math here, and if you do the math, it's something like 3x. So $100 became $300 kind of an arrangement. So right, if you also look at this whole move from 100 to 320 move from this low point of 2015 November to the high point of right now that's happening in the market for this week, 300 and more, it's again 3x move. So whenever we see such a large move in gold, it calls for some good amount of price correction and time correction. So when this happened last time from 2008 to 2011 time frame, we corrected time wise for 4 to 5 years. We went down, and also we did around 8 to 9 years of time wise correction overall to get back to the same levels in 2020 August. So we could very well see something of this kind coming into the chart for next few months to few years. So this is very rare scenarios, or this is like the peak, I would say at least for time being. Can it go and pop much higher a little bit? Yeah, it's very much possible, but the probability of this continuing for long time for this year that it can go up to 400, 450, 500, those crazy levels is very difficult to see. And the one of the reason is also to look at the Fibonacci extensions. Fibonacci extensions that we have put down on the chart, connecting the previous peak to the previous bottom, and you get like 161 extension 2618 extension. So these are like critical levels for the Fibonacci standpoint. So we are almost at a Fibonacci level on the chart for 2168 extension. So just watch out for the long-term move. So people who are holding gold as an investment right now for long term, at least I would consider them to rethink their position and see if they can book some profits and seeds, keep some cash on the hand. And if when the correction happens in the gold, maybe next 6 months to 1 year, they'll give you an opportunity to buy them at a 15-20% lower price points. So now let's look at the same chart on futures to understand how it is looking. So even on this futures chart for gold contract, I have marked up the Fibonacci extension. As you can see on the futures chart, we are already at, or we have crossed 2168 extension on the Fibonacci plot or marking. So even on the gold futures chart as well as ETF, we are at critical levels. So next few weeks to few months is going to be interesting, but definitely if we assume that this rally is going to continue like this forever and gold will rise to 4,000, 5,000 and beyond, we just really need to be realistic in our assumptions and see what best we can do right now. Maybe some take some profit on the table and save some cash for future opportunities to buy. So that's all I have. So it's very interesting to see the gold. I'll keep you posted, but I am at least expecting in the near term for the gold that we may see one retracement. So if you look at just 2 days of action, if you connect the peak of this day to the bottom of this day, in just 2 days we have seen roughly around 5% and more correction on the gold ETF. So more to come. Just watch out. So at least in short term, we may see some relief rally coming in tomorrow. And if it doesn't hold there, then we should see much lower levels. First level around this zone of 275-ish. So if we fall to 75 or 270, 280 region, it will always almost bring us to the level of 12 to 13% correction. That's a decent amount of correction that we can expect in short term if the rally doesn't hold up and doesn't continue to go higher on the chart in following days. So look for levels of 270 to 280 if the rally, if the retracement doesn't hold into bullish move. That's all I have. Have a good day.